On today's episode of the Cryptoverse, we're going to check in on the growth of the Lightning Network. We're going to check the Bitcoin price chart because this pattern is on the edge of breaking out. And we will look at my comprehensive report on the $500 million worth of NEM that was stolen, how it's happened, and what's going to happen next. So all of that on today's episode of the Cryptoverse, so stay right there. Hi there guys, welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies and blockchains. I'm your host, Chris Coney. Let's get into segment 1, the Lightning Watch. So I showed that network graph because it's kind of funky to look at, but what we really want to know is today's stats. One of my lovely viewers sent me this link, which I don't know, I didn't find this on the site anyway, but this is a dashboard of all the Lightning stats. Link to this will be in the video description so you can check the status of the Lightning Network whenever you wish. Now these numbers have changed since I've updated my spreadsheet, however I have to do the check on my spreadsheet at the same time every day, and otherwise the data is pretty meaningless. So today, Monday the 29th of January 2018, we had 326 nodes and 846 channels, 3.61 Bitcoins worth of capacity, or around $40,700. Now that's a drop in capacity of about 2%, but it's an increase in number of nodes and number of channels. So some more collateralized channels must have closed themselves out. What's also interesting today is we've got a spike in Segwit. So check this out. This is the chart from segwit.party and it shows the percentage of overall Bitcoin transactions that are using Segwit. And you can see more recently, big boost. So normally we bimble around 10 to 12%. Easily, I think this is a week's view, 144 blocks. Easily, right, we're way above that right now, and we actually peaked above 18%. Right now, hovering between 16 and 18%. Call it 16.5% right now. So that bodes pretty well. And in fact, moving on to the Bitcoin mempool, the backlog of Bitcoin transactions has cleared. So now we only have a mere, I say a mere, relatively small number of 19,000 transactions waited to confirm and around 58 megabytes. Now I asked my blockchain.info wallet for a fee quote and it quoted me 15 cents to send a transaction right now, which is far superior to what it has been over the last few weeks. So good news all around. As that Segwit chart continues to move up, if it continues to move up consistently, then this will maintain, and of course as more transactions move over to Lightning, this will get even better. Moving on to Bitcoin then. Bitcoin chart, rather. We've talked about this descending triangle pattern and this support, which is ever more consolidating or ever more robust. Every time it's tested, it strengthens. It's around about 10,300. All of those tails not really doing much in terms of breaking below it. But then you've got this downtrending trend line connecting all these highs together. And yesterday we had a right good engagement with it. So if I stretch this out just a little, yesterday's candle is this green one here. The body of the candle just inside it. High of the day went above it, but clearly this is a descending line of resistance. And you can see, this is where you can see that technical analysis does actually have an application. Because if you look at my previous videos, this line was already drawn. And now we can see the market clearly obeying it. The price yesterday was attempting to go above it, but like an elastic band, a rubber band if you're American, it was pulling the price back underneath again. And even today, the same things happened. So while the day closed yesterday around 11,795 and opened roughly at the same amount today, it's been pulled under that descending line of resistance once again. Now, the way this pattern will resolve is as time goes on, one of these two lines has got to give, right? Either this downtrending, descending resistance line is going to break, or the floor is going to break. I think it's more likely that the ceiling is going to break, right? So this 11,750-ish mark is both the 23% Fibonacci level and the descending trend line. I reckon if that breaks, that's most of the downward pressure from a technical point of view broken, and then we can move up back towards 13,300, right? The 50-day moving average is still down a bit, but this flattening is allowing the crash to catch up because the average is being recalculated. However, it's flattening out, just like I said the other day about the 200-day moving average. So if we go down, then 10,300 is the next support line. Again, not guaranteed, but based on previous tests, looks pretty solid. If we break above 11,746 decisively, that might turn into support, and then we could be looking at 13,300. Moving on to the main story though, so NEM, the 523 million NEM tokens that were stolen. So NEM is a top 10 cryptocurrency by market cap. It ranks at number 10 actually, so it's just inside the top 10. And NEM, N-E-M, it stands for New Economic Model, and it describes itself here as a smart asset blockchain. Now there's something called the NEM Foundation, which is based in Singapore. However, if my memory serves me, I believe that NEM has Japanese roots, but don't quote me on that. That's just something in the back of my mind that when I first discovered NEM, that it was a Japanese project. That's not particularly important. What is important is that the story is that on Friday the 26th of January, Japan's second largest cryptocurrency exchange called Coincheck contacted law enforcement to report that they had suffered a fairly significant security breach. So basically someone stole 523 million NEM tokens from this exchange. And at the price we just saw there, which is let's call it 96 cents, that equates to just under 505 million US dollars in value, making it the biggest cryptocurrency hack by dollar value, right? Now, while that's more by dollars than the famous Mt. Gox hack, it's actually much smaller in proportion to the overall cryptocurrency market than the Mt. Gox hack. When Mt. Gox got hacked for several $100 million, that represented like a quite significant proportion of the total market cap, whereas $505 million is tiny given that our total market cap in the whole crypto space is now 573 billion. So it doesn't really register. The question is, how a hacker was able to actually steal that much money from Japan's second largest exchange? Well, the feature set that NEM provide, actually built into the blockchain, is quite comprehensive. That's one of its biggest selling points. It is quite sophisticated. And it includes a world-class multi-sig wallet, meaning when the attacker got into the exchange and proposed the transaction to say, send 523 million NEM tokens to my wallet from the exchange, well, multiple staff members at Coincheck would have to co-sign that transaction with their own private keys in order to authorize it, right? And if you're watching the video version of this episode of the Cryptoverse, you can see this diagram of how that would work. Making a multi-sig wallet makes the private key for the base wallet useless because it then depends on any number of separate keys, 3 in this case, to authorize the transaction before it is broadcast on the main network. Right, this is all fine, except for the fact that Coincheck didn't bother to use this feature. So to be absolutely clear, in no way has the security or the integrity of the NEM blockchain technology, in no way has that been breached, right? The network performed perfectly, and it even provided a feature designed to prevent this kind of theft. It's just that it wasn't used. There's nothing that the NEM developers can do about that if you don't use it. If you leave your front door unlocked, there's nothing the locksmith or the door manufacturer or even the lockmaker can do about it, right? Anyway, this NEM multi-sig wallet, it's so comprehensive, it even allows you to have like 10 signers and require all 10 of them to sign a transaction if you want. If you want to be uber paranoid, you can create a 10 of 10 multi-sig wallet, meaning all 10 people need to sign it, otherwise the transaction doesn't happen. That's the level of security you can have if you will but use it. Now, perhaps the most tragic part of this whole thing, and I'm getting this directly from the NEM documentation. That's what I've got on screen right now. This is the official documentation for the NEM technology. It's this part where it says, quote, "The best part of NEM's multi-signature solution is that it can be set up by anybody in less than a minute with just a few clicks." So then yesterday, hopping over to the Coincheck website, they published this article Sunday the 28th of January. And in this article, they describe their repatriation policy, I can't even say it, repatriation policy that they intend to use towards the 260,000 affected users. So without reading the article, the bottom line is that they will be paying Japanese yen into each of the users' Coincheck accounts at the rate of 88.549 yen per NEM, right? So 88 yen for each of the NEM that you had. And they'll deposit that into your Coincheck account for you to then withdraw as you see fit. Now they calculate that price based on a time period between Coincheck halting trading when they realized the hack had happened and then publishing this article. So I guess they've just averaged out the price or something. Now this process of refunds hasn't begun yet. They say here that once they have figured out a process for it, then they'll make the instructions available so people can begin to submit claims for their money. Meanwhile, Coincheck have been in touch with the NEM Foundation, who are doing their level best to monitor the movement of the stolen NEM on the blockchain, I guess in an attempt to identify the attacker and then catch them. So they've been talking to other exchanges and wallet providers and so on. So, because these are now effectively dirty NEM. So the people are going to try and sell them, aren't they? Right? And probably convert them into some anonymous currency and break the link between them and the money. So what the NEM Foundation are thinking, like, well, we should contact Bittrex or all these other exchanges and say, look out for these coins because they're stolen property, right? Anyway, for more information on this, I'll refer you to this lady Alex from the Inside NEM YouTube channel, who wasted no time in getting Jeff McDonald, who's the vice president of the NEM Foundation, on her show for an interview. So this is a 27-minute interview where Jeff describes what the NEM Foundation is doing to help Coincheck, but does point out the clear failure to use the multi-sig feature that is readily available in the NEM toolkit. All right, thanks very much for joining me today, guys. If you like this episode, go ahead and hit that like button. And if you're new around here, get subscribed. And if you'd like access to my very best material, you know what to do. Head over to my website, cryptoversity.com, click on the courses button. You can either take one of my online courses that you can see here, or scroll a little bit further down, and you can take one of my 2 live workshops. My live talk in London is coming up this Saturday, the 3rd of February, and then the following week, the 10th of February, is my full intensive 1-day crypto investing workshop, also in London. So I hope you will join me for one of those and meet me in person. Other than that, guys, that is all for today. I'll be back tomorrow with another episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.